Ever wondered how banks make money out of thin air? Let's break it down. They don't just use your deposits. There's a secret trick that creates cash from nothing. This video shows how loans really work and why it matters to your wallet. I've dug into the banking system to reveal the shocking truth most people don't see. Most people think a bank works like a middleman. You save money, someone else borrows it, but that is not how modern banking really works. When you ask a bank for a $10,000 loan, the bank does not take $10,000 from another customer. It does not move cash, it does not empty a vault, it opens a computer system, and it types plus 10,000. That's it. The moment the loan is approved, new money enters the economy. Yesterday, this money did not exist. Today it does. Your signature on the loan contract is what brings this money to life. So the bank is not giving you money, it is creating money. This is why almost all money in the system is digital. It is not printed, it is written. And here is the shocking part. You will now spend real years earning real income to pay interest on money that did not exist before this moment. Banks do not wait for money to be saved first. They create money first and collect it back later with interest. Here's where it gets crazy. The bank does not need to keep all the money it creates. In the United States, a bank is only required to keep a small portion as reserve. This means if a bank receives $1,000, it does not lock that $1,000 away. It might keep only $100 and it can lend out the other $900. Now, that $900 is deposited into another bank. That second bank keeps $90 and lends $810. That $810 is deposited again, and the process repeats. From the same original $1,000, the system can create $8,000, $9,000, even more. Nothing new was printed. The same dollar was used again and again. This is called the money multiplier. It is a legal system that allows one deposit to become many loans. So when people ask, where does all this money come from? The answer is simple. The banking system multiplies it. This is the part most people never realize. Money does not come first. Debt comes first. When a bank creates money, it always creates debt at the same time. Your $10,000 balance is someone's $10,000 liability. Almost every dollar you use today was born from a loan. Your salary, your savings, your credit card money. Behind it, there is debt. This means the economy is not built on cash. It is built on promises. Promises to pay back in the future. So when people say, there is not enough money in the system, what they really mean is, there is not enough debt being created. No new loans is equal no new money. This is why governments, businesses, and banks all depend on constant borrowing. Because if debt stops, money stops. Think about this. You take a $200,000 home loan. Before you signed the papers, that money did not exist. The bank created it with a few keystrokes, but now you will spend 20 or 30 years paying it back. Not just the $200,000, but the interest, thousands, sometimes hundreds of thousands more, from your real job, your real time, your real energy. So the bank earns very real profit from money that was not real before you borrowed it. This is why banking is so powerful. They do not need to own money first. They only need your promise. And your promise is what turns their numbers into profit. Here's the final truth. There is not enough physical cash to cover all the money in the system. If everyone tried to withdraw their money today, the banks would collapse, because most money is not real cash. It is trust. We trust that the number in our bank account has value. We trust that the bank will honor it. We trust that the government will support the system. And when that trust is strong, the system works. When that trust breaks, crises happen. This is why central banks step in. They do not protect money. They protect confidence. Because the entire financial system is built on belief, and belief is more powerful than paper. Now you know how banks really create money out of thin air. Next time you take a loan, remember, it was created for you, and you will pay it back with real effort. Think about it, share it, and stay smart with your money.